Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, welcome back to another live stream, second stream of the day, and for good reason. We have, of course, the FOMC meeting minutes event. We're counting down until we get some important stuff from the Fed and from Chair Jerome Powell. Going to be an interesting afternoon to see if we do get some market volatility. It is largely expected to cause moves in the currency market, in the commodities market, in the indices market. As we get started, if you guys could do me a big favor, let me know where you are tuning in from. I'm just curious where we've got listeners from as we give everybody a second to join the call. Let me know where you're tuned in from. I see SD from India. Good to see you. Thank you for being here. Let me know where you're tuned in from. We got moves happening across the board right now. Oil is on the move. For example, West Texas oil, WTI, is up to $71 a barrel. Pretty big move here, up 1.2% today, but also, of course, that's following a day yesterday where we got a big push higher. Wow, look at you guys. Jamaica, South Africa, Morocco, Kenya, watching from the Philippines, Alabama. Very cool. Good to see everybody. France, Nigeria, New York City, Pakistan, Europe, Florida, UK. We got people from all over the place. Good to have you here. And good to see Vanessa Bulent. Good to see you from Turkey. What's up? Australia. All right. What time is it in Australia? It's got to be middle of the night, I think, right? It's got to be really late. Anyways, let's talk about what we've got. We've got to set the scene for what is a very important event of the month. The FOMC, really it's about the press conference. Expectations for markets are not to see any significant rate cuts or not to see a rate cut today. But maybe the bigger theme is that now we are wondering if we're going to get rate cuts in September, because the probabilities of a rate cut in September have admittedly come down a little bit. And I think that's part of the story as to why the dollar, which I've been really pounding the table on this one, I think the dollar is in the process of reversing. I think we are moving higher in the dollar. I could be wrong about that, of course, as with everything, markets are hard to predict. But it seems like the dollar is in the process of turning. We have the economic data to support that, at least right now with this move that we're seeing. I think so. Let's take a look at what we saw this morning. And now you have to understand, if you're somebody who watches every day, then you know 3 or 4 weeks ago, I was a little bit more bearish on the dollar. I got neutral on the dollar, and now I'm flipping to bullish. It looks like we have a sustainable breakout, in my personal opinion. And I think that dips in the dollar may actually get bought. So let me show you why I think that is. If I pull up the U.S. economic heat map, also let me ask you guys, we have people from all over the place. Andover, England, very cool. Seattle, Poland. Wow, that's awesome. Very cool. So I want to talk a little bit about the reason I think the dollar breakout is supported fundamentally. And I also want to ask you guys another question. I asked everybody where you're from. Let me know also, what are you watching the closest this afternoon? Are you watching gold? Are you watching the dollar? Are you watching euro dollar? Are you watching the NASDAQ? Are you watching the S&P 500, Bitcoin? What are you guys watching the closest as we go into the big event, the FOMC meeting minutes? Is Powell going to stay strong? Is he going to not cut rates? Is he going to suggest that rate cuts shouldn't happen in September? That would be some market moving stuff. We could see some more dollar strength if that takes place. So here's the thing, right? Why the dollar bullish tilt that I've had recently? Well, I'm at a point where I am pretty proud to say that I think that in many ways the EdgeFinder is smarter than I am, especially considering it can keep an eye. It has where I have 2 eyes, the EdgeFinder has thousands, right? So what I mean by that is it can track all of this data, and it's giving us an idea as to what the data is generally suggesting about the state of the US economy. So if I take a look at the state of the US economy, we take a look at some of these figures, we've seen GDP statistics, which came in better than expected this morning. We had a smash hit in GDP numbers. 3% compared to 2.5% expected. US economy is growing right along. In fact, above trend. We're growing at a very sharp rate. And this looks really good for the US economy. We do not seem, to be going into an impending recession. And this has happened multiple times in this bull market. In this bull market that we've lived in, it has not gone unchallenged. There has been countless, economists all thinking, we're going to go into a major recession. It happened during the Biden era where we saw inflation picked up globally pretty dramatically. In 2022, the economic community was pretty much in consensus. Everyone pretty much agreed that in 2023, for the most part, the majority, we were going to see a recession. What happened in 2023? Did we get a recession? Nope. We saw a reversal in the economic data. We saw some excitement around AI, and we saw the stock market absolutely rip all the way through 2024 for the most part. You had some blips in there, but for the most part, it was a great period of time. Stock market ripped. And so in 2025, we got another round of everybody thinking stock market's going to crater. We're going to go into a recession because of the trade dynamics and the tariffs imposed by the administration. People were like, that's going to send us into a recession. And it didn't happen. So beware, be very careful when you see everybody kind of getting to one side of the boat in markets. We have to be careful. And what I want to talk about really quick with indices, right, are we now at the opposite extent? Are we now, everyone's on the other side of the boat? Everyone's thinking that the stock market's going to, go to the moon and everything is good and nothing is wrong? Well, believe it or not really. Now, where we are kind of in consensus is that the market thinks, for the most part, that we're not going to get very big moves for a while. Over here, the VIX was giving us a huge reading, suggesting that volatility in markets, yes, it's the S&P 500 volatility index, but it extrapolates to pretty much everything: currencies, commodities, gold, oil, whatever. They tend to all move in terms of volatility. It's pretty comprehensive. It's pretty correlated across many different asset classes. So volatility expanded, and then now it has just drifted into oblivion, where now markets are not really moving. You do have some moves in like the dollar now. Things are picking up a little bit there, but not nearly as much as we saw the moves in April. Everything was moving like crazy in April. So when I'm looking at this, right, this to me warns that, okay, we're likely to get spikes in volatility. It almost always, it's a mean reverting asset for the most part. Typically when volatility is low for a while, we get a spike. And when we get a big spike, we typically move back lower, and then we move higher, and then we move lower, and then we move higher, right? This tends to be what volatility looks like. So we're at a very low volatility period. So I'm very cautious right now to be adding a whole lot of, I'm not essentially shoveling money into long risk assets at this time, for sure. I'm definitely not. And I'm a little bit more defensive posture when it comes to risk assets like crypto and indices. But in terms of the state of the US economy and the US dollar, I think we have some light at the end of the tunnel for the US dollar, which has been in a painful downward move for the dollar bulls this year. And I have not been a dollar bull for a while, but I think things are shaping up. We have some trade deals that seem to be coming in. We have some economic data that seems to be shaping up in favor of the US for the first time in a while. And I think it's important as traders that we don't make our decisions based on our biases. I've ranted 1,000 times this year about political biases, but also there is also the natural bias to just want to, because you've been bearish on something, to keep being bearish on something. But when the facts slap you across the face and we get data that contradicts a bearish narrative, I think this is where we have to pivot. Now, of course, this is what I do. And I am, I've been trading for a long time, but nobody knows for certain what the markets are going to do next. So just because my indicators are generally flipping more bullish fundamentally for the dollar doesn't guarantee that the dollar is going to go higher. But to me, everything in trading is risk to reward and probabilities. And so when we look at the dollar across our economic heat map, most of our indicators suggest some strength for the US economy. And so to me, that is a reason to look for dollar breakouts. That is also a reason why I'm not particularly interested in being long gold. I think gold has room to continue to slide lower. I'm not bearish on it, but I'm just not, I don't really have a strong opinion. I'm very neutral on gold at this time. I think stocks can continue, but the only way I get involved in them is if we get a pullback. Now, I own a lot of individual stocks, but I'm talking about index level trades would have to see a pullback before I can get anything there. So this is put to the side. I put this to the, I'm very bullish on the indices, but would love, as I've said many times in recent streams, a pullback, I'm more interested. Where they currently sit, the risk reward is just not quite there for me. So yeah, looking to join a community of traders? Join right here. Hit the subscribe button. We're here Monday through Friday doing market coverage on major events. It's completely free to subscribe. If you'd like to join our Discord, that's not free, but it is a very high quality group of traders from around the world. So come join us there if you want. Information can be found on a1trading.com's website, or we'll drop a link here in the chat if you want to join our signals room / community chat. We do have some information about that. We're running a huge discount right now. So guys, we have got not too long before the FOMC event. We are expecting, like I said, some very big moves across assets. We're expecting a move in indices. We're expecting a move in commodities. Silver and gold are down going into this report. We'll see what happens here if gold wants to continue to sort of drift lower. And this is, in my opinion, I think Powell's going to look at some of the data that we've seen here, and I think he's going to be a little bit more on the hawkish side. I could be wrong about that. But again, what I just showed you, GDP stats came in this morning very, very strong. ADP numbers came in strong. And we've had just overall a rotation of data that looks favorable towards the US economy and hence the US dollar. So a stronger dollar, higher yields are suggesting that the Fed may not be in a position where it needs to cut interest rates aggressively. Take a look at the 2-year yield or the 10-year yield. And what this is telling you is that the bond market's saying, yeah, the Fed's going to probably stay on hold. If you want to see a bunch of rate cuts, you want this thing moving lower, and we're not getting that. So inflation has sort of moderated. It's not going down a ton. It's not going up a ton. But growth metrics are looking solid. So that suggests, okay, we don't need rate cuts right now. We're doing okay in the current environment. Remember that we want to cut interest rates typically when we can or when we have to. And preferably you want to do it when you can, not when you have to. When you have to, it's like, oh, the labor market's breaking and we need to cut interest rates to save the day. That's not really the environment that we're in. Jobs data has been really good. So the Fed's like, okay, we can cut rates, but we can do so at our leisure, at our own rate. And so the thing that they're looking for is inflation to cool off a little bit more. In terms of where inflation is at, we've talked about this a lot. Well, we can just stay on our economic heat map. CPI is at 2.7%. Remember, target is 2%. So we're still a little bit of ways from our CPI target. But overall trend has been inflation's cooling. We also saw the producer price index number came in nice and soft. We were expecting 2.5%. We got 2.3. So we got some good inflation data there. However, PCE, the Fed's preferred measurement of inflation, came in at 2.7 compared to forecasted 2.6%. So we have some inflation that's sticky. We have some that's, soft. And then we have some that is in the middle. So inflation's mixed. We're not too soft. We're not too hot, right? So the economy, I don't think, is in dire need of rate cuts. But if we can get a good round of inflation, we might get Goldilocks, in which case economy is growing and cooling inflation. Rate cuts come off the back end of that, and then now we're looking at an environment where risk on maybe just, maybe we go into some sort of melt up environment. We'll see. But to me, if you get some really good inflation figures next month, you might be looking at an environment where this market goes into melt up mode. Because again, you've had really good economic growth, retail sales numbers, GDP statistics, PMIs, ADP numbers, NFP reports. I mean, we've had a good round of growth metrics. And so that's what the Fed's going to probably look at today. Powell's going to probably say, look, we've had some good data. Inflation is still a little bit offsides. If we get a good inflation report to confirm ideas, rates probably can get cut. That's probably, in my opinion, what is going to be said. So does that favor dollar bearishness? If they're going to cut rates, isn't that dollar bearish? Well, yes, but remember, other places are cutting rates too. It's all about the speed of rate cuts. When you're trading currencies, you're talking about relative to other currencies. Is the US in a situation where it needs to cut interest rates faster than its peers? No. Interest rates are expected to be cut in many places in the US, but in other places too. The Fed cutting rates rapidly causes the dollar to weaken. But if other places are cutting interest rates even quicker or in more of a desperate situation, the dollar can go up. It's all relative, and why currencies can be very confusing for traders. Currencies are all valued relative to other currencies, right? Because you can't quote dollars in dollars. You have to quote dollars in reference to euros and pounds and Aussie dollars and yen and all these different currencies, right? That's how currencies are valued. Gold, on the contrary, is sort of a look at, a precious metal versus a major fiat currency, the dollar, or you can look at other currencies, but it sort of moves based on the general trend of overall central banks. So why has gold gone up so much in recent years? Because inflation and rates have been moving lower. Lower inflation and lower rates is weaker currencies in terms of their buying power, more money printing, more, all of those stimulus from rate cuts, more currency into the system. Gold goes up. And that still is overall the story. And so long term, I'm still a believer in being a gold bull. But short run, with some very strong economic data out of the US, remember that the other factor for gold is that gold thrives on uncertainty, both geopolitically and economically. But economically, where are we at? Well, economically, we just had a good round of US data. We had, basically we've had economies that seem to be performing better than expected, not just in the US, but I can show you a really cool chart. Let's take a look at our economic surprise meter. We can pull this up and we can look at the global impact. This is a new thing that we just added. So the economic surprise meter looks at all of our major currencies and says which ones are outperforming expectations in their respective economies. Keep it really simple. That's what this chart shows you. The US has been outperforming a little bit beyond its expectations. UK is mixed. Europe has been outperforming expectations. Yen is sort of mixed. New Zealand dollar outperforming expectations. Canadian dollar almost underperforming, but sort of still in the middle. Same with Australian currency. Swiss franc outperforming. What about the average overall between our 8 majors? Well, the average is slight outperformance globally on the economic front. Is that bullish or bearish for gold? If economies are holding up better than economists had suggested they would. Is that good or bad for gold? Reminder, gold thrives on chaos and uncertainty and economic turmoil. So this is not good for gold. This is bearish for gold. So that is what I think is keeping gold in a position where long-term trend still looks okay, but short-term, we've still got economic strength in a lot of places. So range bound makes a lot of sense. So don't overcomplicate this. I know there's a lot of traders in here that love watching gold, but there are times to move on from gold and trade other things. That's my personal opinion. If you only trade gold, I get it, but only trading gold in this environment is very different than trading it in this environment. A lot of people, I can't tell you, I've got a lot of comments about this. People frustrated about trading gold in the last few months because it just keeps faking them out and going nowhere. We just broke down the fundamentals. It makes sense why gold is not extending too far one way or the other. We just explained the forces behind this. Dollar looks pretty strong right now. That's part of the reason you've had, this attempt to move higher on gold completely flop on its face. So I no longer have any trade on gold. If you've been watching, I took a long, I made a small profit, trailed out, and now the market continues to move lower for gold. So this is just one that I just have no interest in wasting time on, right? Look, I love trading gold. It's one of my favorite things to trade. In fact, it's the second most favorite thing I like to trade. I like to trade the NASDAQ, number one, gold, number two. Those are my two favorite things to swing trade. But there are times to move on and find greener pastures, right? As a trader, it's kind of like chasing the buffalo. If there's no buffalo to chase, we move on to the next area. So when it comes to gold, just not very interesting right now. You know what is interesting? Oil. I've got a good trade running on oil right now. Let me pull up my USO trade so I can brag a little bit. I've got a trade on that's up $8,900. $8,900. All I did is I looked and I saw oil with all of that good economic data. Remember how we just talked about US economic data coming in strong, all this stuff? Remember how we just talked about that? Oil benefits from strong economies. Why? In strong economies, trains, planes, and automobiles, shipping goods, moving things around, does that happen more or less in strong global economies? More. It only makes sense. Logically, the demand for oil should go up if economies of the world are roaring. So if we're going to enter into this AI-sponsored, economic, prosperity time, if that's going to happen, oil's going to be a winner. Oil has been down in the dumps for some time. So again, where I just told you about my gold trade, which I gave back like pretty much all of my profits on, transparently, that was kind of a annoying trade, win in my favor. I was floating a really nice profit, a couple $1,000s, and then gave it all back. Oil so far is moving nicely. So here's an oil trade that I took. I went long oil because, again, EdgeFinder gave me that confirmation. US oil, very bullish reading, plus 11 score. Economic data is the winner here. You want to talk about why is oil so strong? Economic data, GDP statistics, blasted out of the water this morning, right? Jobs data, strong. All these things, really, really good. That sponsors strong oil prices. So I'm long oil. Reminder, if you want to check out the EdgeFinder, it's the tool that I use to find the trades that I take. It is ending our biggest sale of the year. It's ending tomorrow. So take advantage. Click the link being dropped in the chat right now to speak directly to our support team about getting access to the EdgeFinder for a massive 45% off discount. It's our biggest sale of the year, and you unlock a ton of market data to start taking your fundamental analysis and sentiment analysis to the next level. Guys, we're about to do something really fun. I have got a trading battle that we're going to be doing here between Chris Pulver and the Akil Stokes. If you've never heard of a trading battle, you're in for a treat. We're going to be trading the FOMC event live on camera. Two traders going head to head, trading, placing trades in front of your very eyes into the FOMC meeting event. If you are ready for that, we're going to drop a link here in the chat. Chandler, if you could grab that for us, if you don't already have it, we're going to be dropping the link to the live stream starting in just a moment. So I'm going to shut down this stream and we're going to all go watch. Well, I hope you'll join me. It's going to be a lot of fun, but I'll be joined by Chris Pulver and Akil Stokes, two legendary, super successful traders in the industry. They're going to trade one-on-one and I'm going to host it and look pretty. That's what I do best. So I hope you join me. But I just dropped a link here in the chat. Thank you for that, Chandler. Make sure, guys, to go click this link and join me over there. So we're going to shut down this stream and that stream is going to start up in just a second. So again, go ahead and do that. We're going to be trading the FOMC meeting and the press conference live. So coverage with the three of us, traders who've been doing it between the three of us, you're probably talking about like 40 years experience, maybe more, 50 years of experience. So it's going to be a lot of fun. We're going to be trading that live and doing so on the trading battle, which if you've never heard of a trading battle, again, like I said, basic idea, we're going to trade the markets live in front of the audience. We're going to trade gold. We're going to trade oil. We're going to trade indices, currencies. We're doing it all. They're going to place their money on the line in front of a live audience. And I'm absolutely ecstatic to do it. This is the second time we've done this. We had a lot of fun last time. It was a great time. So do not miss the opportunity. And I'll see you guys over there. I'm going to jump over into that right now. Again, link is in the chat as we speak, or you can just search up on YouTube, The Trading Battle. We're going to be live in 3 minutes from now on that channel. I hope you join me. Okay, shutting it down on this side, and I will see you guys over there. See you guys.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.